on inflation, we do have a controversial call here. I think the prevailing wisdom is we have an inflation problem. This is not transitory. And I will say that the supply chain bottlenecks have lasted a lot longer than I would have expected. And the latest version of that is consumers running out and buying holiday gifts well before they normally would, because of supply chain issues that might prevent them from buying presents later. So we believe that the bigger risk here is deflation. And there are three reasons for this. Two are secular, one is cyclical. The secular reasons, one is good and one is bad. So we are experiencing today the biggest uplift in innovation. We're in an innovation age, the likes of which we have not seen before. And the learning curves associated with the technologies that Barbara mentioned up front, the learning curves are characterized by cost declines. And I'll give you some of those. We focus our research on Wright's law, which is a relative of Moore's law, but it's a function of units and not time. And so for every cumulative doubling in the number of whole human genome sequence, costs are dropping 40%. And we're at a very low base. So we're going to see a lot of cumulative doublings. For industrial robots, that number is 50%. For battery technology or battery pack systems, that's 28%. When it comes to artificial intelligence, we are learning that training costs, so AI training costs, are dropping at a rate of 60% per year. So these are massive deflationary forces. And this is disruptive innovation at its best and most prolific, really in the history of all time. The bad form of secular deflation is associated with the creative destruction associated with disruptive innovation. Now, we have seen since the tech and telecom bust, and then again, maybe even more so in meltdown, increased risk aversion in the traditional asset management world. And part of that was a shrinking of investment time horizons and the demands for profits and dividends now, which we believe to the extent companies cater to that short-term point of view, that many companies have not invested enough in innovation and are going to be disrupted or disintermediated. They bought back shares to manage earnings. So a lot of financial engineering and leveraging up and to service that debt now, if their products are going obsolete, and we think a lot of products are going obsolete, they will have to cut prices to these products. The third source of deflation, which this is the most controversial, cyclical, we're looking at the behavior of businesses versus consumers since really mid-2019. In 2019, the yield curve inverted and China-U.S. trade tensions got worse. Businesses became risk averse and they stopped growing their inventories faster than sales. They cut back on capital spending. Then we move into the COVID crisis and they shut down. And of course, the government puts in place stimulus payments. The consumer saving rate hit 33% in April of last year. So consumers went to market. Really, it was to buy goods, which are only a third of total consumption. So they spent the year buying goods. They couldn't really buy services. And businesses have not been able to keep up with them. What we think is happening now is double and triple ordering, which will end up in, we believe, a significant inventory overhang next year. And that will be cleared by cyclical price cuts. Now, in terms of monetary policy, and this is where, and fiscal policy, this is where you and I discuss and debate a lot, Art. I remember after 08-09, I was sure that the monetary easing would unleash, and fiscal policy easing would unleash inflationary forces. And I was wrong. So velocity, which I know you consider only a residual, but velocity went down. So the rate at which money turns over went down. People were scared. And we know from the 70s, it is when velocity picks up And when consumers and businesses try to get ahead of price increases and interest rate increases by buying now, that we see an inflation problem building and moving into wages as well. We are at a very important moment right now. Velocity is stabilized. It's ticked down in recent months, and I believe it will continue to tick down because what I just gave you was a deflation story, a secular deflation story, which, if we're right at how powerful this story is, will mean that velocity will continue to fall because prices are going to fall and interest rates are falling. I think interest rates, you asked me the other day why I thought real yields were negative, 10-year yields negative. Do we really believe real GDP growth is going to be down negative for the next 10 years? I think there's a lot of mismeasurement right now taking place in the nominal GDP accounts. And if we're right, these statistics, having been born in the industrial age, do not account for the digital age. So that probably means that real GDP growth is higher and inflation lower, but it's very confusing. I will give you that because the markets are contradicting each other.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.